Thanks very much for joining us for InTek Freight and Logistics, the podcast, and it's episode 39 today. I'm Kevin Baxter, joined by my co-host for this edition, InTek President Shelly Austin. Hi, Shelly.
Hi, Kevin.
On this episode, we are bringing the lumber as we take a closer look at lumber and building materials and the market in relation to the broader economy, and of course to freight. And to help us put it all together, we welcome Kyle Little, Chief Operating Officer of Sherwood Lumber, also the first Vice Chair of the North American Wholesale Lumber Association. Kyle, thanks very much for joining us.
Yeah, thank you for having me.
So before we get into the nitty gritty, tell us a little bit about yourself and Sherwood Lumber and what you do there.
Yeah, so I'm Kyle Little, of course, as you mentioned, Chief Operating Officer at Sherwood Lumber. Sherwood Lumber is a family-owned and operated wholesale lumber and building material distribution organization. We have associates across all continental United States and service all 48 contiguous states. We are known as a national leader in the wholesale and building materials distribution networks. Looking to continue to grow as our economy and our overall housing industry and or building materials industry grows. We've been operating for more than 70 years in this segment. It's like I said, family owned and operated, second generation transitioning into third generation. Looking to continue to build new distribution networks across the country. Great.
So obviously lumber is a big part of the business. It's in the name. But it's not just lumber. I mean, it's a pretty wide variety of building materials, right?
Yeah, historically, like I said, we have a long history, over 70 years now. It was founded based off of commodity forest products, and now has expanded into an exterior building products line. We dabbled with other what we would call specialty forest products and what have you. We will move back to our core competencies of commodity softwood lumber back in 2017, 2018, and then we put together a business plan to greenfield startup an exterior building products line. And it started with a siding line, went to a stone veneer line, a decking line, and so forth, and now has expanded our network across the Mid-Atlantic and Northeast, primarily on those product lines. Nationally is really would fall under the softwood lumber that I mentioned earlier. We have just a lot longer history and experience doing that. So we're taking what we would call baby steps in this exterior building products distribution, but looking to continue to expand it into the Midwest and along the Eastern Seaboard in the years to come.
So Kyle, we're very freight focused here at InTek. And so interested, with all these different products, you have some heavier products. It sounds like probably a lot more heavier products. What kind of transportation? I would assume you use a lot of different types of transportation in regards to moving this commodity.
Right. So, let's talk about inbound versus, and then we'll talk about outbound. So we do on the forest product side, a high percentage of our volume is done by rail, so into any one of our distribution points across the country. So taking really big bulk items and breaking them down to where we're selling full truckloads, less than units to our customers across our distribution network. In addition to that, we're bringing a lot of material inbound via container and break bulk vessel on ocean, whether it's coming from Europe or coming from Brazil primarily. And then backhauling that material into any of our distribution points. Some of it we're distributing out of the ports, but for the most part, for anything LTL or less than unit, it's coming out of one of our distribution points. So we have to backfill, some volumes through there. So inbound, heavy, high volume items. And then outbound on our distribution network, we're really focused on Conestoga flatbed trucks or current side equipment. I'd say 90+% is sitting on the flatbed carriers of what we do for commodity forest products. And then, as we move into our specialty lines and what have you, we use our our own dedicated fleet for the service of those accounts. It's a go-to-market strategy quite a bit different for the exterior building products customers relative to the high volume commodity forest product side.
So when I was looking on your website, and of course, being in the lumber, you're a very sustainable company, so very much on sustainability. And as in our sector, we're with the intermodal and the rail and all of that, we're very much into the I can't speak it. Sustainability. And so how you mentioned, I believe, a lot of carload in on the rail, and then you're doing a lot of that flatbed and kind of stowing it out and everything in that regards. What we're seeing on our side in regards to intermodal is we're seeing a lot of influx on like the 40 footers and 45 footers, which kind of fit well with that heavier product. Are you looking to try and convert to some of that of what you put on a flatbed, or is it more regional moves and that's why you're focusing on those flatbeds and Conestogas?
It's more regional moves. It wouldn't necessarily be on adding. We're always about maximizing capacity on a truck. Let me tell you, like anytime if we ship a truck, it goes through our system, it gets flagged if it's under 46,000 pounds, right? So we want to make sure that we're maximizing that capacity on our commodity side. On the specialty side or the exterior building products, we can never max out our weight on those trucks. So we have to max out revenue on those trucks. So we really measure them based on what are the dollars that we're shipping on that truckload, because it's making 8, 9, 10 stops to a variety of different customers in a small regional marketplace. So freight is a large component of our, I'm not sure say large, it's a huge component of our commodity business. Getting the product inbound as cheap as possible and then outbound to our customer base, that's the margin that we generate in our transactions. So it's really, really important for us to make sure that we're maximizing capacity and also minimizing, any situation where we can, have a potential for lost margin.
So lumber, there's a piece that you wrote a couple of years ago, actually, talking about lumber as an economic indicator, and it's not hard to draw the line there, definitely. But tell us a little bit more about how you consider lumber an economic indicator.
Yes. So I actually touched on it last week in the national media, but I've done quite a few different presentations and talks about it as well. Lumber historically tends to kind of be one of the first raw commodities that provides an indication or provides some sort of signal that a trend is changing. Doesn't necessarily mean it's going to go to a certain number or what have you, but just that change where supply or demand overtakes supply would indicate a change in or particularly into lumber, a substantial change in what's happening into our economic engine across the United States. So historically speaking, lumber trades within plus or minus 10 to 15% of its production costs. So 10 to 15% below, 10 to 15%. So you're talking about roughly a 30% move in a lumber price year over year over year. And when you see moves north of that, that tells you there's a huge imbalance one side or the other. So maybe there's too much demand and too little supply. That would indicate a surge in economic activity. The opposite, which has happened over the last 2 years, where we've seen lumber now recalibrate and get back to its, down towards the cost of production. And a move significantly below cost of production would tell you that there's probably a little bit of economic challenges ahead for the world or for the nation. So today, lumber is sitting right now somewhere between 22% and 35%. There's not many at 35%, but let's just say on average 25% below the current production costs of the finished goods. So that's an indication that we're extremely oversupplied relative to the current demand. And does it mean that the demand has just gone away? Was it already used up prior to it? We don't know. That's the $64,000 question. But what it is saying is there's probably some more shakeout in the broader economy before things will ultimately change. And in our industry, it typically is driven by big moves are driven by either lack of supply or too much supply relative to the demand that's in the marketplace. And that's what happened during COVID. This is what's happening after COVID in this next cycle. The good thing is that we've been going down in this last cycle for more than 21 months, which typically it doesn't really last a downward cycle more than 15 months. So you would think that we're getting closer and closer to some sort of to the next inflection point, which would ultimately tell us that we're onto a new cycle.
It's interesting. All of that sounds very similar to the freight market in
Yes.
terms of timing. We had like the peak period during the pandemic where everything was booming, and I think that 21-month thing is almost exact,
Yes.
really, for us too.
Well, the one thing I would say on the freight side, it's interesting, is that all of us experience freight doubling, tripling, quadrupling, whatever area. But if you looked at it relative to the commodity or the product that you sold, if freight is roughly 20% of everything that we sell every single day, the interesting thing during COVID, when prices were super, super high, freight was still about 20% of what we were doing before. So it had the same elasticity of the commodity price.
Yeah.
So it was very
That is
interesting
interesting.
phenomenon. I never really tracked that or really looked at that until we went through that super cycle of pricing. But it stayed relatively the same. I mean, not exact,
Yeah.
but it wasn't so far off.
So in the freight market, we're definitely not seeing, we're not breaking any records yet. We'd like to be there soon, but we do see just a little bit of a hint of light. Are you starting to see that similar in the lumber that you think? I mean, you mentioned we've hit 21 months. I mean, you think we're going to start to rebound, but what are your thoughts there on what you see in the lumber?
Well, the one thing is there's a few things that I see. One, that the consumer is starting to understand now that lumber is really inexpensive relative to history, right? So like it's in the national news, whether it be in the Wall Street Journal or CNBC or these podcasts or anything, it's getting out there. The information is now hitting the marketplace. And typically in our commodity, because lumber typically flies very low below the radar, it's late cycle when people recognize that these things happen. Same thing happened in COVID to the upside when we doubled, tripled, and quadrupled price. Similar things happening now in this reset. The other thing I would say is that we have seen or observed a much higher sales pace relative to our to what we're shipping, meaning that we're selling more product today than we're shipping out in a single day. So if we did, just using broad numbers, 5 million board feet today in sales, we're only shipping 4 million. That means we're starting to build an order file, meaning that like there's more demand coming to us. Number 3, I would say that our inquiry relative for business that's going to start or commence in the fourth quarter and the first quarter of next year has steadily increased. So meaning there's more interest in buying lumber at somewhere close to these prices for further out, which that tells me to think that there's demand that's out there. It just needs to be pulled in to consummate its marriage and turning into an actual project. So those 3 things have been really something that we've observed and are looking towards better opportunities ahead. And let's face it, the 4th thing we could add is, everybody's worried about interest rates and where they are. Like we're dealing with a much higher interest rate environment than we've had in a long period of time. But all indications are it's not going any higher than where we are today. Right. It's just a matter of time. It's not if, it's just when is it going to start to ease off. And today, Chair Powell spoke and he's concerned about long-term growth and the GDP. And so if he's throwing out those nuggets to the marketplace, then interest rate cuts are on the table as we move forward.
Yeah, there's been some talk lately after maybe a special level of pessimism on rate cuts. It seems like there's a little bit of a shift there where it looks like we may see some this year again. After all,
Yeah.
Eh,
And typically also like the amount of speculation that happened during the low interest rate cycle, that takes time to kind of weed itself out. So those homes, those projects, whatever those things are, they have to kind of like, go through that cycle. And it takes typically a little longer than we expected, just like as this interest rate, increase takes longer than expected. So um, if we're patient, and we continue to grind through this cycle, I think it really will set us up for, some much better times ahead.
so speaking of the relationship, is it almost a one-to-one relationship really in terms of how lumber is doing versus how the housing market and construction is doing, or are there some nuances there?
Well, I think typically lumber does its thing well before it comes through in the housing numbers. So like early days of COVID, we already tripled our price before housing starts or even permits recognized that the thing was rising.
Mm.
And I would say that there's probably a quarter lag, 1 quarter ahead of where roughly 3 to 4 months lag between what lumber is doing and what the general marketplace sees. So whether it's up or down, that tends to be kind of the thing. We will typically go up for a quarter before the real housing starts numbers, one show or confirm, what we've done in the lumber market.
So, I mean, that really does speak to what you were talking about, the little bit further out look where people are expecting maybe the rates are going to start dropping. And so they're
Yeah.
loading up to kind of prepare for that.
Yeah. And, if you looked at earlier this year, let's use the first and second quarter as a guideline, just looking at the largest home builders in the country, and you look at their stock prices, they are all at all-time highs. And by the way, lumber at that time in the fourth quarter stabilized and moved up way before that. So they were at all-time highs because they had a business. We were selling the commodity in advance of that, and then we saw it. Now you see lumber doing what it's done over the last 4 or 6 weeks, and you could look at the home builders now; they're starting to underperform relative to everything else. Kind of
Yeah.
very similar.
And so you mentioned there had been there's definitely some reason for optimism moving forward, but I think you just tweeted yesterday something about the lumber retesting the most recent lows as well. So we're not out of there yet.
We're not out of the weeds yet, and it typically takes a few weeks. There's one data point that I've been watching, particularly like when you see a long-term moving average and a short-term moving average intersect, it typically you see something happen, or a pattern happen within a certain period of time after that phenomena occurs. And I think we are in the second or approaching the third week of what after that inflection point happened, and typically within 4 to 6 weeks of that, there's a confirmation of a low, and we typically see a quick move back to the to the shorter term moving average. So that's, I hinted on CNBC last week, we're going to see a bear market move, like a substantial move in price. When I say substantial, it's like a 10 to 15% move back up to that short-term moving average. And but the interesting thing is that bounce in price, albeit needed for the marketplace, doesn't put the sawmills above their current production costs. So even with that bounce, that bear market move, a 10+% move, maybe even up to a 15% move, doesn't put the sawmills in the black. They're still in the red, and then producing at substantial losses. So that in itself kind of tells me that supply is not going up because of any rally anytime soon. Supply is going to continue to be flat to down, meaning, and because I do believe future investments are going to be shelved, and I think current production is going to be decreased to try to allow these producers to weather the storm, maintain the minimum amount of cash flow that they need to operate their business through, so that they can survive through these challenges.
Yeah, so you mentioned that like 25-ish% below production costs. What's the ideal number? I mean, obviously, as high as it could be is great for them, but that where's that like balance point where it really?
Historically speaking, if you look at long-term performance of the major sawmills, you're talking 10 to 15% on average over production cost. It's not like the lumber has been a commodity that historically has these major moves or trades at large multiples over the actual input cost. So when logs move with the market, so they have a variable cost there. Energy is a variable cost. Labor is fixed, but labor continues to rise. So we know what's happened there from an inflationary standpoint as well. So, the fact that we're sitting on inflation adjusted prices today within 5 or 10% of the 2008, 2009 economic collapse, to me is like unbelievable. Like, how can these homes, an investor in a sawmill, operate or want to put his money there, knowing that this commodity price, cannot, move up to a higher trading range long term. It will, but we also have to recognize we came from some crazy, crazy times during that, supply chain challenge of, COVID.
Yeah, there's still that period, the adjustment of thought there based on what happened before, how everything usually was versus this crazy period, and so adjusting expectations is kind of big for not just lumber but a number of industries.
Well, I think generally we have, as people, society, very short memories, and it's like we don't recognize that over the previous 20 years or the previous 10 years prior to COVID, things operated in this way. And what's happening today in the majority of economies around the world, we're moving back to what the new norm is going to be. And the new norm will be slightly different than what it was the previous 10, but it's not necessarily going to be anywhere close than what we saw during that disruption period.
Yeah. In our industry, Kyle, we're always looking for like catalysts. What's the next catalyst that's and is it going to be impactful enough to make a big change? All right, it sounds like you have similar in your industry that you guys look for. And can you expand on a few of those that you always kind of are monitoring to see?
Yeah, I think the big, the buzzword today is what? It's actually an acronym, right? AI. Like nobody knows how that's going to affect our business yet. I think in the freight business, it's going to be substantial how it's going to change, at least from an operating standpoint or an administrative standpoint. Mm-hmm. So that's something that we are trying to get our hands wrapped around. What's the first area for us to tackle? Is it in warehouse management? Is it in some sort of customer, a CRM? Is it on the freight side? I think we're probably going to look at the freight side as being an area that we want to focus on first, and then we'll see where we go from there. I think the other catalysts that I would be looking at would be continue to look at the actual supply of homes that are sitting for sale in the United States. We hear all these headlines today, particularly on the new home construction, and being somewhere between 60% of the total inventory of all the homes for sale in the marketplace. That's historically very, very high, but that's kind of taken out of context because the reason is the existing homes in the marketplace today, people aren't comfortable in transitioning into another home at the current interest rate environment and the current home price environment. So the existing homes for sale are abnormally low because of people are locked into all-time low interest rates. Their cost to live in that home is extremely low. But in addition to it, they have the most equity accumulated in history, like the current homeowner today. So the first time homeowner can't afford to buy a house. The current homeowner can't afford to move or doesn't want to move because they have so much equity to go out there and do. So the next thing that we're going to be focused on is, because of that equity that's sitting in the current homeowners, is understanding what's happening in the repair and remodel segment, because people are going to live in their homes longer because of this phenomena. And a lot of the thing that a lot of people don't realize in lumber, the largest consumer of lumber, 40%, over 40% of all the lumber consumed in the United States goes into repair and remodel. Only about 32%, 33% goes into new home construction. So this is an area that doesn't have really good data to support, like, to see what the demand changes are. But so one of the things that we're working on is trying, what are some key data points that we can start to measure and use to help us better predict, forecast, what are things to come.
Interesting.
And we think it's there in the repair and remodel, not necessarily in the new home construction.
Very interesting.
For our business.
Yeah, and again, that ties back into freight. I mean, we're still dealing with the volumes being down, and I mean, you've just illustrated one reason why the volumes are down. So that's something that I think we've been watching as well in the market, is to see when a commodity like lumber becomes, and other building materials becomes, it gets going again, because then that means that the capacity gets filled up on the freight side and helps out that market too.
Yeah. The thing about our industry right now, we believe that the money's there. It's just looking for a reason to put it to work again into that segment, right? Like we stole a lot of demand during COVID because we were all at home. Nobody was working in an office space. So there was time to get all of those projects done. So it was very difficult to get a contractor through that period of time and get the work done, but people did it. They were paying up and doing what they needed to get done to get that done. Today, the contractors are a little bit more receptive. They don't have the order files that they've had in the past. And it's not because the people don't want to do the work. They're just like concerned. They don't know if, like, one, the job is so secure today. I just need a little bit of a signal that there is calmer waters ahead. And I think once that signal, or whatever those signals are that allow people to be more comfortable, then the sentiment will change. And sentiment changes super quick. Like, fear is a huge driver, right? And it's probably the biggest one. And right now there's more fear in the general marketplace than we've seen in a long time, which is also a good sign that, the pendulum's probably going to swing sooner than later to the other side.
How would you, I mean, just me, because I don't look at the things the same way you do, but I'm wondering, would you agree also, in comparison to that people, that, like you said, money is there, but they're doing a lot more traveling. I'll tell you, I can't get on a plane where it's not packed anymore. And it just feels like that's where a lot of the money is going right now, is experiences and traveling. And whereas before, like you said, when everybody was at home at COVID, that's the time to remodel, redo, and all that. So hopefully some of that will simmer down a little bit once everybody gets it out of their system, that, hey, I want to leave, I want to go, I want to do this, I want to, and that then they start opening up that money to building again.
Right. I would agree. So if you look at COVID, we went overweight in spending money on your house. Now, after COVID, we've been overweight on travel and leisure. And if you look at all the inflation numbers, what are the inflation numbers that are so sticky? Travel and leisure, right? And now everybody is going to transition. Okay, well, I just went to Italy, I just went to Hawaii, I just went here, and okay, now I need to go, get back into working on my house. I haven't done anything for 2 years on my house, so I probably need to, go out there and do something. And the other phenomena is that COVID did, I think, forever change the work from home environment. Yes, businesses in general are trying to move more people back to the office place. But prior to COVID, less than 10%, it could have been closer to 5% of the workforce had an opportunity to work from home. Today, it's still almost north of 20%, closer to 30%, has some sort of hybrid work environment where they're working, 4 days a week in the office, 1 day a week from home, or every other week with a day from home, whatever it might be. So the idea of having a place of residence that allows you to be efficient still at work is still in fairly high demand relative to the past, and maybe not relative to the 2 years of or 3 years of COVID, but relative to the last 20 years. And that kind of feeds this need to continue to make a home a really, really nice place to live, which would be, future investment in those properties.
Yeah, and also, I mean, everything's connected. If the housing market looks like it's getting better, then people who are thinking about maybe selling, maybe they need to update a room or do the kitchen, do the bathroom, something like that. And so everything does have sort of a connection to each other.
Yep, definitely.
And I mean, it goes with, as you were saying, the behaviors shifting to experiences. We also saw a lot of, beyond just the investing in the home, investing in just stuff. People were buying all sorts of stuff during COVID because they weren't going anywhere. So one thing that we've heard people discuss is they got enough stuff, and maybe they got enough stuff done with their home too for a little while. I mean, as long as the contractors did good work, they maybe didn't need anything again that quickly. But now some years have gone by, and maybe that shifts again because there's new things that are starting to happen.
Yep. Yeah, and I think just that it takes time for those things to work out, and we're going through that process now, it feels a little bit better. I mean, I think I say better in the sense that the data is now starting to support what we've been feeling and seeing. As much as we go out to eat at a restaurant, restaurants on certain nights definitely are extremely busy. But if you look at I was just in one last week and the week before on a business, which typically caters heavily to business meals and things of that nature, and it was noticeably less. And so I think spending is becoming more where it was just, people had excess cash and were kind of doing it. And companies that were able to go out there and entertain and do things when they could, particularly with the 2-year hiatus of not seeing any of their clients. It, became, multiplied for that short period of time. But I think today, as business climate is becoming a little bit more challenging, we've seen a contraction in overall lumber consumption, as an example in our industry. Now those expenditures are more scrutinized, and maybe we don't have to do it every week. And it's starting to see in some of these weekday business type dinner meals and stuff like that. So and that's here in New York where I reside, which typically is in a lot of cases tends to be a little bit of a bubble because there's just so much going on and interact. But you definitely are starting to see some noticeable changes. It's not the way it was, just a year ago or even 2 years ago.
So do you think if we get to that first rate cut, does that start to open some floodgates because people will see, okay, now it's actually happened? We're not just speculating about, maybe it's about to happen or maybe it'll happen in a few months.
Yeah, I think I saw a thing with Barbara Cochran. She was talking about interest rate cuts and what that would do to housing, and her estimates. And she said somewhere between 10 to 15% increase in demand. Like she thinks just that, because there's people that want to do something, but they're waiting to have confirmation. And, typically people don't buy in advance. I'll just give you an example. In our commodity world, I typically sell at the top and sell at the bottom. I know I do every time, but every time I do it, it's by mistake. Not because I picked a number to go sell at the top or picked a number to buy at the bottom. No, it's because I'm hoping and trying to go out there and do that, but it's never because I did it as planned. But the majority of people, when they want to buy, they want to have confirmation that the bottom is in.
Yeah.
Right. If they miss it by X percent, so be it. At least they're going and riding the wave at the bottom part of the curve.
Yeah. And as you were saying, I mean, there's not really much of an indication that once they do start to cut rates, that they're just going to shoot back up again. That once the cuts start, it's probably going to continue for a while.
Yeah, for a period of time. I mean, it's not going down where we started. I mean, I think that's also going to be difficult for a lot of people to recognize. But the reason where we were is because there was major uncertainty in the overall economy. And our business, everybody's business is going to have to learn how to operate, off of what is been a historical trend in, interest rates, even though we're at what, 5.25% on the prime or what, where we are today, historically speaking, it's still below the long-term average. So, and be able to maybe like cut that, by 20, 30, 40% over time, that would be good too. I mean, it's still going to be higher than where a lot of people, worked here in the short term, but in the long term, it's still in a very, very attractive, interest rate to conduct business.
So you talked about the fact that the mills are kind of holding back a little bit on supply. So one of my other questions coming in was, if the demand suddenly shoots up, is there any kind of supply issue? It doesn't sound like that's going to be the case.
Yeah, it will be the case at some point, and it will be when nobody expects it. But it will happen. Like, we will see another, like, I guess, my point is that we're going to see a bear market move, but the bull market move will be confirmed with some sort of unexpected supply chain disruption. So, like, if demand, it doesn't take demand to, it doesn't need to come up like 20% or something like that. If you see demand come up 10% and the market has reduced by 15%, there's 5% move like that. It's going to, it doesn't take a lot in order for lumber to do that. And it typically would last a quarter or two. But I guess to answer it really quickly or sum it up is, I believe there's much more volatile lumber prices ahead. But does it put it back to like the COVID numbers that we experienced? Probably not. But we will see, north of 50% move in lumber price at some point in the next 18 months. I think that's very safe to say. But because we're coming off like extraordinarily low prices.
Yeah. Well, when you talk about a supply chain disruption, I mean, obviously there's always something sort of brewing out there. I mean, we've got hurricane season, so we've got potential for effects there. We also have the potential for a strike along the East Coast ports, which I'm assuming, based on the locations of some of the imports you were talking about, that would affect us.
Yeah, that would affect us. And in addition to it, like, we didn't talk about this much, but we have an increase in Canadian duties coming into play over the next 30 days. So of commodity forest products imported from Canada to the United States. So there's these small little things that could add up. And then, like you said, hurricane season, we've only had 2 named storms so far, and they've been pretty bad. Yeah. So we'll see how that plays out.
Does the potential for a rail strike up in Canada have some effects on you as well, in terms of?
Yeah, that always does, but I always feel like that gets settled. Yeah. Like, in my history, right. Long-term history, 25 plus years in the business, that they always find a way to like get to the table at the last minute. It's never really mounted to anything. The biggest thing on the rail side for us historically is a bad winter. Like, so the Canadians, particularly like 2018, 2019, had a very, very difficult time with very, very unseasonably or historically low temperatures, which really slowed down transit time across Canada. Train size obviously had to be reduced for safety reasons. And so getting the quantity of commodities to the marketplace at the time that they wanted it created this new system with high velocity, low velocity that really created a problem in 2018 for lumber. And that was the first time that we ever saw, 50. Actually, no, we saw 100. We saw the price double that year because of just that phenomenon, where order files would historically be 2 to 3 weeks, moved out to 8, 9, and 10 weeks because of the transit time. The mills had the production to supply the market, but they couldn't transport it to the marketplace. So, like, when you have those kind of things, it changes it.
Well, great. Was anything else you wanted to touch on before we wrap things up?
I don't think so. I really appreciate you guys' time and great questions. I hope I could help with and provide a little bit more insight for you and your listeners.
Absolutely.
Yeah. And before we let you go, tell us where people can find more from you and from Sherwood.
Yeah. So for myself personally, at Lumber Little on Twitter, or I should say X, and typically do a lot on LinkedIn and some other things, or take a look at www.sherwoodlumber.com to find out more about our organization, and hope that we can help you out.
Great. Kyle, thanks very much for joining us.
Thank you, Kyle.
Great. Thank you again.
A good perspective on an important industry out there that certainly ties very close together with freight.
It was amazing how close it ties. His perspective on it really helps as well, because you see it from a different angle and a different light of what we see in the transportation industry.
Mm-hmm.
But how it all ties together, it really is neat to kind of put all those pieces together.
Yeah, it was kind of mind blowing how the timing of the market moves went almost exact to
Yes.
to a lot of what we're dealing with ourselves. Too.
I agree.
But yeah, it'll be interesting to watch lumber and freight and see where we're headed as we move forward.
Let's get some more houses.
Yeah, right. Build,
build,
right?
build.
Well, thanks very much for watching and listening this edition of InTek Freight and Logistics, the podcast. And again, thanks very much to Kyle Little for taking the time to speak with us. Subscribe or follow wherever you watch or listen. Feel free to drop us a comment or a question, anything that you'd like to get in touch with us. Great in any of those formats. Also, always email us at podcast@inteklogistics.com to get in touch as well. And our website, www.intekfreight-logistics.com for more about what we do. Shelley, thanks very much for taking the time.
Thank you, Kevin.
And we will talk to you next time.